Welcome, everyone, to Name Confidential Live.
All right, welcome to Name Confidential, episode 44. I am your host, Ben Fox, and today I have the pleasure of introducing our speaker, Larry McMillan. Larry is the founder and president of McMillan Analysis Corporation. He has over 35 years of experience trading options and is also well known for his educational option books and option newsletters. His most popular publication, Options as a Strategic Investment, is one of the best-selling option books of all time and is commonly referred to as the Bible of option trading. So Larry, thank you for joining us today.
No, glad to, Ben.
Well, perfect. Well, I'm excited to learn more about what you do and get your thoughts on the market and all that fun stuff.
All right.
First off, we're going to start off with the name exposure index here. So let me
Mhm.
get my screen shared. All right, and then as a reminder, name exposure index represents the average exposure to the U.S. equity markets reported by all of our members. Larry, you contribute to the name exposure index each week, right?
Yes, I do.
Awesome. So it looks like this week we're at 91.60, so about a little bit higher than it was the previous week, 88.31. That doesn't necessarily surprise me. How about yourself?
No, and that survey was taken when Thursday or
Wednesday.
Wednesday.
I think Wednesday, if I remember
Wednesday.
right.
Yeah, so I mean, nothing. Today we had some selling in the market, but certainly not really anything by Wednesday. I kind of look at that chart as I think many of the name contributors are momentum traders. So they, are looking at their indicators, and if the indicators are bullish or getting more bullish, they're going to stay bullish. They're not trying to pick the top or pick the bottom. So the direction, as you said, was up. I think that's the important thing on that chart is to uh, either see a reversal of direction or not see a reversal of direction.
No, I agree. I know that I don't think we've changed at Scarecrow, at least for a little bit here, that then we or at least since I believe probably May, I believe was the last time our strategy changed for the name exposure index. What about you guys? How often are you making changes?
Well, I mean, I change the percentage fairly often.
Okay.
I follow, you know, four basic categories of indicators, and they don't flip around a lot. Although breadth, the way I look at breadth, it does change pretty rapidly. But the other things, not so much. So if I'm like 150% bullish today, I'm not going to report a minus 200 next week.
Understood. Well, awesome. Well, I know I asked you a few questions that we were going to line up for the interview. I always like to start off with a fun one. What is your favorite investment quote?
Okay, so since I'm in the option market, one of my favorite quote is from Fisher Black. The Black-Scholes model was created by Fisher Black and Myron Scholes, who at the time were professors at MIT. They actually worked with a third um, professor, Merton, but he didn't agree. When they got down to the end, he didn't agree with the distributions that they were using to predict stock prices. So he backed, he took his name off the project, which I'm probably sure he's not happy they did that since they won the Nobel Prize and other things. But anyway, so Fisher Black eventually made his way to Wall Street, worked for Goldman Sachs, and Myron Scholes stayed in academia the whole time. But he consulted on things or whatever. But anyway, Fisher Black had a great quote: "Is the market appears a lot more efficient on the banks of the Charles River." MIT is in Boston on the Charles River than it does on the banks of the Hudson. In other words, in real life, the market goes crazy, and in academia, it behaves itself. So I thought it's a great quote because it really kind of describes the whole difference between, guys coming up with theories and people actually in there trading.
Definitely. No, one of the things I love is everybody's had a different quote so far, so I never know what the quote's going to be, and that one's very interesting and very applicable to what you do as well, which is nice.
Right.
Well, all right. Well, let's get started. I'm excited to learn about kind of what you think the state of the market is, what you do, and if you want to start sharing your presentation now, I can stop sharing on my screen and we can get started on that.
Okay, so where does it say share screen?
It should be the green share button on the bottom.
Yeah, well, I've got a very like compact. Okay, there's share. Well, let's see. I want this one. So do you see that current state of the market?
Yes.
Okay, so I'm just gonna skip forward through some of these just to get to my indicators because we don't want to be doing this for a long period of time. But I look basically, I said I had four main categories. Those are the four: the chart, equity only, put call ratios, market breadth, and then the things having to do with volatility, VIX futures, VIX options. Actually, that probably breaks down into several categories. But the S&P chart. Oh, well, I have a couple of rules of my own. I guess you could say these are quotes. Oversold does not mean buy, and overbought does not mean sell. So when the market just starts taking off, like it was for much of this year, I don't try to jump in front of it and pick a top. I'm waiting for a confirmed sell signal, and actually don't really have too many of those. But here's the long-term chart, and actually I'll go to the next chart, which is the long-term chart is obviously in a long steep uptrend. It has had a few little corrections, but nothing too crazy. In fact, the 9 and 10% corrections there really launched a whole another strong rally after each one of those. But here's the current chart, and it's got a couple things on it that I've been paying attention to. First of all, there's an island reversal. You see we gap down here and then gap back up there a few days later. I think that was like November 1st and November 6th. And so it left this island in the wake, and that's certainly a very bullish formation. Then we moved to new highs. So today, though, I don't have today's. I'll try to draw today's line. That's not a very good one. But anyway, we came down and just barely went below what I consider to be a very important support area right there, 58.70, because that was the old high. And my way of thinking, that should hold. If it doesn't hold, um, we'll definitely have a problem. So we closed today at 58.70.62. So right on it.
Great.
Yeah, that's right, 58. So this is still a bullish chart, in my opinion. I mean, yeah, we had a pullback, but we're still trending high. We're not even back to the 20-day moving average yet or anything. So I think that looks like a bullish chart to me. One thing that we do with these, we put on what I call modified Bollinger Bands. Again, returning to the option. The model, the Black-Scholes model, in there they have a definition of realized volatility, which is the standard deviation of percentage price changes. And when John Bollinger invented the Bollinger Bands, he used as his definition of realized volatility the standard deviation of closing prices, which sounds reasonable, and it is. It's just that the math guys use the other depth. So since we're in the business of trying to compare implied and realized volatilities, we need to calculate them in a similar manner. So we use the Black-Scholes definition of realized volatility. And this is the current chart with the bands drawn on it. The one up here, that's the +4 standard deviation band, and then just inside it is the +3. So the last time we got a signal was way back here in August, was a buy signal. We came below the lower band and went inside the next band, and the target for this is to touch the upper band. It's came close there, but it didn't really touch it. It hasn't touched it yet, and who knows, may not. It doesn't have to touch it ever. But we've obviously took bullish positions that time. Since we're trading options, we roll them up along the way, take partial profits, and keep pushing the striking prices higher and higher. So we're still long though off that signal, and that's really one of our longest lasting signals. There had been a sell signal right before that, but you can see that reached the lower band pretty quickly. So that came to fruition in a short period of time. This has really been one of the longer ones I've really actually ever seen on this. But in our newsletter, our main newsletter, the Option Strategist, we have a long-term track record on this indicator, and it really has been very successful over the years. The next
How long
thing
does it go back?
what's that?
How long does that indicator go back for tracking?
I'm trying to think. Probably into the 1990s
Oh, wow.
at
Okay.
least. We actually have a service that uses TradingView. This is that same chart. Trading. If you have the service through TradingView, you get the little buys show up. So that's that last buy signal in August. You can see there's no further sell signal there, and that was the prior sell signal to that. And you can do these on not just the index, you can do on any stock or futures for that matter. So the next thing I look at is put call ratios, which is a contrary indicator invented by Marty Zweig back in the 1950s. And essentially, if too many people are buying calls, that means everybody's too optimistic and the market's probably going to go down, or vice versa. So here's we put up about 1,650 put call ratio charts on our website every day, and typically you would like to see this inverse pattern that we publish the stock price as well as the put call ratio. They move inversely to each other, and in fact, a very important inverse pattern is this one. This is not a current chart, but the S&P 500 is on top, and on the bottom is all stock options that trade, the equity only put call ratios. You can see the inverse symmetry there, and that's why we use the equity only put call ratio to predict the broad market. So here it is right now. We had a turn. So a local maximum on the put call ratio chart is a buy signal. And that was a good one back in August. We've come down here now and we got this local minimum, but it hasn't progressed. We're kind of right in the middle. We're just drifting sideways. So I'm actually put a question mark on this one because I want to see it. If it's going to give a sell signal, I need to see a breakout like that.
Right.
This is not through today. It's through yesterday. So maybe today we got a boost upwards, but this is a 21-day moving average. So it's not going to jump a huge amount in one day. But in any case, that's, the bottom of the chart, if you're low in the chart, means you're overbought. People are buying a lot of calls. So in general, it's optimism in the market, but, I wouldn't say it's a verified sell signal yet. Then another thing you can do is what we call the weighted put call ratio, where we multiply the option volume times the option price, and we get this chart, and very similar. So I think the weighted put call ratio, which measures the dollars being spent on bullish option opinion versus dollars being spent on bearish option opinion, is actually a better chart. But it too is kind of drifting sideways here, and for it to generate a sell signal would have to jump, higher. And again, I have no idea where it is today, but that's through yesterday. But I would want to see it jump up there, and then that would be a verified sell signal. Otherwise, it's still neutral and not on a sell signal.
Right. And are these something that you said that you post each day on your website or not?
Yes, so these are discussed in our daily newsletters every day, but we also post these actual charts are part of the 1,600 that go up on the website every day. And the subscription for that is pretty cheap because we don't necessarily give any interpretation, buy or sell or whatever. I mean, I'm explaining to you here what I have in the newsletter, but just the chart itself doesn't have those buys and sells on it or things. It's just the chart. But people get used to understanding that a local maximum is a buy signal and a local minimum is a sell signal. So we trade in the money options when we trade these things, and I'm not a big proponent of trading spreads all the time, as you see on TV a lot. Let me jump forward here to this chart. So by spread, I mean you buy a call at, let's say you're bullish on this stock, you buy a call with this strike right here, and then you also sell a call with this strike right here. Well, what happens then is you cut your profit potential off once you get above the higher strike, and to me, that's something you don't really want to be doing unless there's a really good reason for it. And the only good reason for it mathematically is if the options are very expensive. So the red line is just buying a call, and of course that has no limit to it. So you'd rather be on that line. You know, on TV they'll say, "Well, you're risking less," but you're not really risking less. Your broker is going to ask for full payment of either the spread or the call, so you're risking 100% in either case. Dollars, yeah, it's a little bit different. So instead of buying 5 bull spreads, just buy 4 calls for something, you know, if you want to just balance out the dollars. But in any case, that can be mitigated by widening the strikes out there. And then what we do is if we're in a spread and it hits the short strike, we sell the spread out and move, you know, into a new position. So I'm just going to skip because these are saying what I just said. All right, so, there's just a couple of individual put call ratio charts I wanted to show you. What we do in the individual ones, we just look for extremes. So this is IQV, chart's a couple of days old. We got a new buy signal here just a couple of days ago. This is one that we sometimes throw in a little technical analysis too. We had a sell signal here, but I was looking at, there was support for this stock, CTSHF 74. So we said, all right, well, we're not going to buy puts until it fell below 74. It didn't fall below 74, so we never bought the puts. So sometimes we combine just simple chart work with the put call ratios. APH, that's been a good one on the upside. This is a recent sell signal. You can do with futures too. So the put call ratio chart here on the bottom, right here, that's drawn using the 10-year note futures options that trade on the board of trade. But so you get your local minimum, your local maximum, whatever. We got a sell signal back in August, and it was a pretty good sell signal. You know, bond charts move slowly, but that was a lot of movement. But you don't have to trade the options that trade on the board of trade. In this case, there's an ETF that simulates the path of the 10-year note futures, so you can trade options on that, which we did. Next chart is a little bit similar. Right now, we're getting a buy signal in the 30-year bond, and again, you could trade the 30-year bond options on the board of trade, or you can trade the calls on the ETF TLT, which is basically exactly that. You know, the TLT is actually trading the futures. You just don't have to know that. So, you know, we cover both futures and stocks and ETFs, et cetera, in these put call ratios. Another thing we'll look at is breadth. I'll just jump ahead here. That the red area is a overbought condition and the green area is oversold. Really, this chart goes back to 2013. We haven't been oversold for much of that time. We were in 2022 when we had that bear market.
Right.
But no, we really haven't been. So, but we did dip down right before the election and just barely got an oversold territory and then popped out. You may recall that I said earlier that oversold does not mean buy, but what is a buy is when it stops being oversold. So we got a buy signal. Well, I guess, was that election day? I think it was. And then we went into overbought territory, and we just came back out of that. So we got a sell signal a couple of days ago. So this is really the only indicator I have that's on a pure sell signal, and it flips back and forth pretty fast. I know, I'm sure a lot of our subscribers don't really trade this one all the time because it gives a lot of signals, but I do like it myself. And then finally, we follow cumulative breadth in terms of volume on advancing issues versus volume on declining issues. This has been very strong. It's made a new high 30 some times this year, and this past week it made new highs on November 6th, 7th, and 11th, and so did SPX. So what this really means is that there's not a negative divergence in the market right now. This is confirmation that things are healthy. You know, not every bearish market starts with a negative divergence, but a lot of them do. So the fact that there's not a negative divergence here kind of make me think we're just going to have a little correction here and not a real large decline. New highs versus new lows, that's something I followed too. That gave a buy signal back in August, and we're still on that same buy signal. What would terminate the buy signal for us would be if there were more new lows than new highs on the New York Stock Exchange for 2 days in a row. That hasn't happened since August. So I don't think it even happened today. Let me just look real quick here. Oh yeah, new lows outnumbered new highs barely today. So if that happened again on Monday, this signal would finally be stopped out after a, three months plus buy signal. And then finally, VIX. The VIX chart is important in a couple of ways, but mostly these spike peaks on here are buy signals. We have a trading system we built around it. The big one was there in August when it went blasting up into the 60s and came right back down. Most recently, we did have a buy signal when VIX jumped right before the election, then came back down. And today, VIX it probed up above 17, but it closed around 16. So this box area here is kind of a neutral area because I try to be with the trend of VIX if it is trending. VIX trends opposite to the stock market. So if VIX breaks out here and gets back above its 20-day moving average, which is there, that to me would be a negative. That didn't happen today, and I don't know. The market was down 100 S&P points, but VIX itself was only up a couple, so that's not a terrible performance from VIX. If you want to look at things, if you look at the VIX futures in a bullish market, they slope upwards like that, a positive term structure. In a bearish market, they slope downwards. So right now, this is what I took this afternoon. We're sloping down there and then slightly up on the rest of these. So it's kind of clinging to a barely bullish scenario, but still bullish. And the CBOE publishes volatility indices, a 1-day, 9-day, VIX is a 30-day. You can see these slope upwards much more obviously. So that's a bullish picture there. And this is what it looked like right before the election. Now, it was heated up before the election because a lot of traders thought the market was going to make a big move one way or the other. And so the short-term options, the 9-day was more expensive than the 30-day, which is more expensive than the 3-month. That quickly got back in line. But we were able to make a couple of trades based on that thing. So just finally, that's how my indicators look. They're kind of scattered out now. The other day, they were all on the left side, and I was reporting a plus 150 on the NAIM index. But so this is essentially what I'm looking at when I do the NAIM index. And we still have that buy signal from, the volatility bands, Bollinger Bands. New highs, new lows is hanging in there. The construct we just look at it's kind of staying bullish. The chart, I kind of pulled it off the edge because at the time this afternoon it was below 58.70, but 58.70 is my crucial indicator. But the only real sales signal we have is, as I said, is the breadth oscillators. These other things are just kind of neutral. So I don't know. That's probably more like a plus 100 than a plus 200 or anything for next week's NAIM, assuming they stay in that order. And just one last comment. We do a lot of seasonal trading, and there's a bunch of bullish seasonals coming up after Thanksgiving, which we will be trading this year. And I think most Decembers are positive, except for 2018, which was a disastrously negative December. But
I
anyway,
remember that one well.
yeah, not fun. That was not fun.
So then, would you add would seasonality end up in this chart? For would you have like a seasonality impacting this separately, or would it just work its way in to some of the
Yeah, I mean, that's a good question. I don't let seasonality. I mean, I will trade the seasonal trade as a separate trade, and I pretty much trade all these. What I guess I'm not showing on there is we are still holding a core bullish position as long as S&P is above 58.70. If it falls below 58.70, then I'm just going back to trading these individually, whichever way they line up. But and as I said before, when the options go in the money, we roll them up. So, you know, even if you've been in a position a long time, your risk might be small in it because you've already rolled the options a few times.
And then when it comes to putting a number to the name exposure index, what decides if that's a 150 or a 200? Do some of these
Well,
indicators have
well,
different weightings?
200 of these would all have to be on the left side of this page. You know, they'd all have to be bullish. And minus 200, they don't have to be bearish. So it's just a matter of, you can see there's more things towards the left side of the page. So I would, you know, I would call it probably plus 100 looking at that set of data right there. But by next Wednesday, it could change.
Yeah, because what'd you say the SP 500 was 58, just above 58.70?
It was right on it, actually.
Yeah.
So if you really want to quote Harris, it was above by a few pennies.
Cool. Okay. Well, I do have when I was looking at the charts and you're running through them, I noticed that there were different colors sometimes on the buys and sells. Does that mean anything, or is
Right.
that
Yeah. So just bring one up here. There. Okay. So green means it's open currently. That's this buy signal.
okay?
Red means it was a successful signal. So this sell came down and touched the bottom. This buy went up and touched the top. Blue means they were stopped out for losses. So we had a sell signal there. Market started down, but did not get to the lower band, and then eventually went back outside the upper band. That stopped it out, and that's the same thing for that one back there. So on all the charts, that was basically the same.
Got it. Okay. That makes
Yeah.
sense.
I've had
Okay.
people tell me I should have the losses be red, but too late now.
I've already done it that way for so long. It
Right.
would almost confuse you at that point.
Yeah, exactly.
Well, great. That was a lot of good information and a lot of fun charts there. You said there's how many on your website to look at each day?
So the put call ratio charts, we have about 1,650
Okay.
on there every day. And we do have a summary that tells you where new buy and sell signals are happening. And the same thing with those Bollinger Band, the modified Bollinger Band. We have a summary on those too. we don't look at 1,600 of those, though we're only looking at mostly the most active stocks in that
Okay.
regard.
And then if any do you have a contact page on here if anybody wants to reach out or
Yes.
more?
That's our contact information. This website right here was set up for name members, but if you're interested in money management, yeah, this would be the better website to go to. I will say our minimum account size is 100,000, just in case you wondered. But you can email us here or phone if you want. People don't phone much anymore. But our website is optionstrategist.com, and we've just recently upgraded it, and there's a lot of interesting things there. There's free volatility data, for example. If everything that trades options, we have the realized and implied volatilities there. It's all free. So if you're trying to decide if options on some stock you're looking at are expensive or cheap, you can get a pretty good handle by just looking at that free data.
And then you do is it every Monday, like a little market update on YouTube?
Yeah, so we have a YouTube channel every Monday. We've got these daily newsletters, and then we have a couple of other newsletters which are not so much market speculation. One is just selling puts, which a lot of people like to do, and we have a good track record on that. And then there's another that's just special situations that really have nothing to do with the market per se. But like today, I just wrote up and an analysis of NVIDIA earnings they're going to be reporting next week. And it turns out that, the market is predicting about a 14-point move. The option market is predicting about a 14-point move in NVIDIA. And usually you don't have a clue as to whether it's up or down, but now we're starting to see a buildup of call volume, which kind of indicates that traders are starting to think that the move is going to be on the upside. So we have things like that too.
Well, awesome. Sounds like a lot of different things to look at. Do you have any other last thoughts before we close this up?
I mean, not really. I would just say if you are trading options, I would suggest buying in the money options instead of out of the money options, just because personally, I hate to be right about the underlying and then lose money on my option trade. That's not what I'm in the business of doing. So if you're right on the underlying and you bought it slightly in the money option, you're going to be right on the option too.
Great. Well, I want to thank you again for coming on to Name Confidential, sharing your vast amount of knowledge, and hope to see you here again.
Okay, Ben. Sure. Be
But
glad to.
until then, I'll let you go. Have a wonderful weekend, and we'll catch everybody here for the next Name Confidential episode next week.
All right.